Peace and greetings. This is Corey Rose from YBN, everyone's favorite internet entrepreneur. And in this video, we're going to be talking about the 16 types of sources of financing for your startup business. So if you like this type of information, make sure to hit that like button, push the subscribe and the bell so you can get this type of information directly to your inbox each and every time. Without further ado, let's get into the video. So as you see here, we have the 16 types of sources and financing for your startup business. I know a lot of people out there are looking for funding, looking for financing, especially in this corona period that we in. Funds are limited, and there's still sources and ways to get money for your business, even a startup business, and that's what we're going to go over today. So one of the first sources of income is personal source. Money is your own savings or equity. Personal resources can include profit sharing or early retirement funds, real estate equity loans, or cash value and insurance policies. So before you go out and seek money, first find out how much can you personally put towards your venture. Okay, the number two source is friends and relatives, which is a great funding source if you have that type of network and support. Financing sources from parents, relatives, and friends, which is the friend and relative receives a ownership interest in the business. So you're not just they're just giving you money, you're exchanging the money for equity and ownership in the business that you're starting. Number three, venture capital. They provide capital to young businesses in exchange for ownership share of the business. So venture capitals, VCs, are one of the best ways to get funding, especially if you have an idea that is capital intensive. Right, venture capital might be the best source for you. Number five, we got government grants and programs. Now, everybody's looking at this funding source because, as you know, with government grants, you don't have to pay them back. Now, with central and state governments often have financial assistance in the form of grants or tax credits for starting up or expanding your business. Now, let me expand on tax credits a little bit more. Now, tax credits is a great way to start your business, get funding for your business, because it allows you to put in place the things you need to establish your business, but gives you a quote unquote discount on those things. So make sure to know all your tax credits and deductions, because there's a lot of hidden money there. Six, we have equity and offerings or equity shares. Now, the business sells stock directly to the public, and it can raise a large amount of money doing so. These is when a business, let's say you have an S corp and you dedicated a number of shares to your S corp, now you have the ability to share those shares at the price you deem to the public. And this is not, in the stock market, anything. You can sell this privately to the public. Now, IPOs are different. IPOs are initial public offerings, and they're used when companies have profitable operations, management stability, and strong demand for their products or services. So, just yesterday, Airbnb just did their IPO, and it actually went up 103%. So IPOs are a great way to raise money if you're at that stage in your company. 8, we have warrants and bills. A warrant is a security that grants the owner of the warrant the right to buy stock in the issuing company at a predetermined price at a future date. Well, this is so great, guys, because imagine if you had a warrant for Amazon just 5 years ago. Then you had a predetermined date. Let's say, I can't even think of the stock price of Amazon like 5 years ago, but let's say it was $1,000, right? Now, 5 years forward, yesterday it was trading at somewhere around $3,300, right? Now, because you have that warrant, you can buy 100 shares. Let's say the warrant was for 100 shares. You can buy 100 shares at $1,000, even though the price now is 3,300. So that's a great way um, to raise money and to make money as well. Nine, you have banks and other commercial lenders, and most lenders require a solid business plan, positive track record, and plenty of collateral. These are usually hard to come up for startup businesses. That's why, guys, I preach, and if you watch my other videos, having a professional business and marketing plan, because banks and commercial lenders not only want to see the nuts and bolts of your business, but they also want to see your marketing plan. How do you plan on making this money back that we are lending to you? And as a startup company, you're probably going to have no positive track record because there's no history. You may have no collateral. Um, you don't have any revenue. So coming in with a great professional business and marketing plan and having high credit, personal credit, definitely will put you in a good light with these commercial lenders. 10. Commercial finance companies. Business does not have substantial personal assets or collateral. A commercial finance company may not be the best place to secure financing. Now, commercial financing companies, as I said before, I put it on the list for startups. I know a lot of people think startups are companies that just beginning, but startups are considered companies that are under $2 million. So you could be in business 2, 3 years, have revenue, have some collateral, and this will be a viable option for you. But if you're starting your business brand new, this is something that you will have to build up to. We have number 11, bonds. Bonds are different from other debt financing instruments because the company, specifically the interest rate, and when the company will pay back the principal. Um, so bonds, as you know, are a great way to raise capital. As it says here, uh, the company gives you the particular interest rate and when the company will pay back the principal. So you know exactly how to set up your cash flow. We have 12, leasing rent. It is a legal agreement between two parties that specifically the uh, it's a legal agreement between two parties that set the terms and conditions for the rental use and tangible resource such as a building or equipment. So equipment leasing, auto leasing, real estate leasing is a great way to take an asset that you have and to raise capital through the asset and keep ownership. We have 13, commercial papers. Commercial paper is an unsecured short-term instrument usually issued at discount from face value and reflects in the market's interest rates. So if you need short-term funding, um, unsecured funding, commercial paper is a great tool. As you see here, we have an example on the left side here of one through the Dasher Bank in Mumbai. 14, bank overdraft. A bank overdraft occurs when someone withdraws more money from their account than available. This is also referred to as an account being overdrawn. Now, this can be I put on this list because it can be a funding source, but this is when you're on your last leg and have exhausted every other option. Because as you know, with overdraft, they have big fees, and depending on how much and your type of business bank account, it could end up you, if you couldn't pay it back, end up killing or closing your business bank account, which, as you know, is essential to running your business. 15, asset-based financing. Started talking about this more and more often because this is becoming a option for a lot of people out there. And asset-based financing is a mortgage of a fixed asset such as land, building, machinery, and factory. So similar to leasing, you can use your asset to finance against it and use that money to fund your project. And as it says here, you can do that with land, building, machinery, or a factory. And the last of the 16 sources, we have private placement. It is the sale of securities to a relatively small number of select investors as a way of raising capital, usually large banks, mutual funds, and insurance companies. So we're talking about this usually with private placement. This can go with VCs, as we talked about earlier in this video, or a small number of friends and family can be private placement. Any select number of group of investors, that's a tight knit group, could be private placement. Okay, guys. So, so those are the 16 types of funding sources for your startup business. If you have any questions about any of these sources and you feel uh, these sources are valuable for you, put which number in the comment works best for you. Also, if you need help with funding, we're going to have a link in the description where you can set up a free consultation to speak about your business and what's the best way to go about funding for you. And make sure, guys, when you're looking to get funding, make sure all your ducks are in a row. Make sure you have your entity, LLC, S Corp. Make sure you have an EIN number. Make sure you start building business credit towards the EIN number. Make sure you have revenue. Make sure you have some type of collateral as well, because each of these steps will make it so much more easier and speed the process up of you obtaining money for your business. Thanks again for watching. My name is Corey with the K, Rose like the flower, everyone's favorite internet entrepreneur. Until next time, peace and a shade.